Hello, 3M employees, and welcome. Thanks so much for watching. I'm Sam, and I'll be your moderator today. And in just a minute, we're going to be joined by Wesley Boudreaux, who's one of our financial advisors. And Wesley will explore essential aspects like taxes, living expenses, and mortgage rates across potential retirement spots to help you achieve a comfortable retirement lifestyle. And if you stick around after his presentation, Wesley will also be answering some of your questions. Before he comes on, though, I'd like to just very quickly remind you that we are not affiliated nor endorsed whatsoever by 3M. We are a completely independent group of financial advisors here, so please keep that in mind as you're listening along. And if you happen to see any YouTube cards popping up on your screen as you watch this video, feel free to give those a quick click. They're going to guide you to different resources we have available for you, one of which may simply be a link to a past video that might be of interest or concern to a 3M employee. And without further ado now, here is Wesley Boudreaux.
All right. Thank you for that introduction, Sam. And as she talked about, we're going to be kind of going over some of the financial aspects associated with where am I going to retire? Where am I going to live when I retire? Obviously, there's a lot of emotional aspects for you to figure out. And I'd say if I were to kind of put a guesstimate on it, I'd say probably 80% of people we work with, maybe 85% of the people we work with actually just tend to simply stay where they've been for their working career or for their whole lives as well. But there is that 15 to 20% that actually does make that shift and that change. And we go through that review process with them to figure out, okay, where am I going to live in retirement? A lot of times it will be people that are leaving from high income tax states to lower income tax states. But usually there's a situation where maybe they've got a family member already there. Maybe they grew up there and they've got some ties. It's not strictly just financial. We'll get into some of these financial aspects to think about, like housing costs, taxes, both state income taxes, property taxes, healthcare, things of that nature as well. So first and foremost, again, we want to understand the taxes, how those rates are going to affect you from one state to the other. One of the things I'll talk about at the end is we do run what's called a cash flow analysis, or really a financial plan. And a lot of times we'll talk with you about, are you staying in the same state, or should we compare two states? Let's say, for instance, somebody's looking at going from California across the state lines to Nevada. Big difference there in state taxes because they're going from a high income tax state to no income taxes, or maybe they're moving to Arizona, or maybe somebody's going from New York down to Florida. We can compare those side by side and show you not just how it looks now, but how it's going to look over the next 20, 30 years. And you'd be surprised at how much those savings can add up to. We also got to factor in property taxes. I'll show you some charts here, kind of giving you the breakdown of property taxes across America. And again, those are going to be kind of state by state, but also county by county. So it's something to dig into on a one-on-one basis. But again, it's also a factor of it may have low property taxes, but it may have high values of property. So we got to compare that as well. But first and foremost, some of the simplest things to think about are, hey, I'm in a state right now where I've been paying taxes, both federal and state, for most of my career, and I'm done with that. In retirement, I want to actually reduce my expenses, and one way to do that is actually reducing the amount we're paying to Uncle Sam, we're paying to the state governments, and some obvious ones that we know about, Texas, Florida, Tennessee, Nevada. There's also Wyoming, South Dakota, and Alaska are states that don't have any state income tax whatsoever. So that like I alluded to before, if somebody was in California, one of the higher state tax locations, and moved to Tennessee or Nevada, they're having an instant savings in their taxes just on the income tax alone. And we'll get into some different options on the property taxes and property values and things of that nature as well. But some of the ones we always hear about, and we know it's almost like a game between New York and New Jersey and California as to who can have the highest tax rates. So those continue to kind of creep up there for the highest income earners. But again, keep in mind what we're talking about here are going to be the highest tax rate. So that may not necessarily affect everybody. If you're living well within your means, it may not be as big of a tax rate for you. So again, it's important to look at this on a one-on-one basis. But if we're talking about somebody who's got higher income, and a lot of times it may not take that much to jump up into that higher income tax bracket for some of these states, you do need to be aware of this. So let me go ahead. I'll zoom in on this map for you guys for a second, so you might be able to go in there and pick or choose or find your specific state to see what those are. But you can see that the red ones, the dark red ones, are the ones that have the higher income taxes. Some others I mentioned are going to be Hawaii, Oregon, Minnesota, Massachusetts, DC, some different areas. But another thing to keep in mind here as well is it's not just as simple as saying, hey, this has got a high income state tax or no income taxes. There are some other aspects where I think it's about 40, 41 states. So the majority of states don't actually tax you on your Social Security. So that's one thing to remember. Another thing to remember is there's a couple states in here that they do have income tax, but they may not actually tax you on pensions and IRA or 401k distributions. Some of those states, I think Washington, Mississippi, Pennsylvania, I think maybe Iowa and Vermont maybe. And in Alabama is another unique one where they don't tax you on your pension, but they will tax you on your IRA distributions or 401k distributions. So again, other things to be aware of. It's not as simple as going from one to the other. We need to kind of look at the ins and outs of those on an individual basis, which is why that cash flow analysis becomes a little bit more important for everybody. Now, the other thing to think about is, okay, what about my property taxes? As I mentioned, there's some lows and there's some highs, and you also have to correlate that to how much is my house worth that I'm in or that I'm buying. Not to mention, there's also issues where, different counties may have extra taxes you may not be aware of, especially if you're in an area where they built new schools, new fire departments, things like that. There also, you got to understand the differences of homestead exemptions. There may be some increased homestead exemptions based on how long you've been in your property or how old you are, or if you're a vet. There's a lot of different things to look at there as well. And there's some programs where in some states where you can actually avoid property tax altogether if you're a vet. So there's a lot of different things to look at there. But kind of giving a high level on some of these different research reports we've run, some of the lowest states would be Alabama, and the highest would be New Jersey. So kind of taking a look at another map. Oops, excuse me. Before I jump into that map, a good example would be, looking at David and Susan in this case. They're both in their 60s, early 60s actually, and they were concerned about the impact of all these taxes on their specific retirement nest egg. And they're actually up in New Jersey, and they were looking at moving somewhere down south. They had family in Alabama, so kind of lucked out in this case where they're looking at potentially moving down there. And it's not just saving them on the state taxes. They're going from one of the higher state tax states out there, New Jersey, going to one that still, yes, does charge income taxes, but a lot lower. I think caps out maybe around the 5% range or so for Alabama. But the unique feature with them is they both actually had some pension plans, and so Alabama does not tax those pensions. So between those, the bulk of their income was coming from the pension. So really, even though Alabama is an income tax state, they're not having to pay too much in state income taxes. Plus, they're able to find a property that was cheaper than what they were in New Jersey, and the property taxes were cheaper. So they had significant savings across the board there. But like I mentioned, to give you guys kind of a map to show you where these look. Now, keep in mind, this is going to be on an average basis, state by state. So it's not going to give you exactly what you're going to see. Like I mentioned, there's going to be pockets in different counties that may have higher taxes, different areas where they've built new infrastructure. You may have higher property taxes there. But an example, let's say the purple ones, take a look at, I'm used to Texas because that's where I am. Looking at, yes, there's no state income tax there, but there's definitely high property taxes. They can get as high as, 2-3% in some cases if it's a new area. But looking at this board, there are a lot of the dark purple ones are where there's going to be higher property taxes associated with your property. So if you're thinking about moving and making a change and selling what you have now and buying a new place, one of these, be wary of that. So it may be that, hey, there's no state income taxes, but I might be paying just as much in the property that I'm looking at. And keep in mind, if something is maybe, let's say, a 1% property tax versus a 0.5%, it still may be the same case, because let's say you might have $1 million house in California that's you can get for $500,000 in Texas. And 0.5% on the million is the same as a full percent on the $500,000. So you want to compare those as well. But obviously, a higher cost house is going to probably have a higher insurance cost as well. And generally speaking, there's a higher cost of living associated with those areas to think about also. Another thing to concern yourself with is, again, just the overall housing cost and how mortgage rates could actually apply to that if you're making a change. If you have been in the same house and you paid off that mortgage, that's great. But maybe you're thinking about moving to a different area. In some cases, I'm gonna say it's counterintuitive, but we got people that move from Texas to California, or people that move from Florida to New York because they've got family, or because they always want to retire one of those places and they understand the taxes, and we go through that aspect with them as well. But in some cases, if you're downsizing, you might hopefully have a a mortgage-free opportunity. But otherwise, if you're getting back into a new mortgage, we have to consider those options as well. So this is put on here for kind of a big variation to show you. Now, I don't know anywhere we can find a house as cheap as probably 115,000 that you may want to live in at this point. But this report is showing you that I think it wasn't that long ago, but your house is as cheap as about $115,000 in Hot Springs, Arkansas, which is a fairly major retirement community area in Arkansas. I think the average in Arkansas now is probably closer to 200,000 or so if you look across the state. But then you've got on the other side, California, one of the higher property tax states, one of the higher property value states. You got averaging closer to $800,000. That's probably up since this report as well. So again, this just gives you that disparity. But taking a look at an example, we had a case where Alex was actually just turned 60, if I recall. And he was debating the aspect of staying in California versus moving to somewhere that he'd never been before. He was single. He didn't really have any ties or family ties anywhere else, and was adventurous. We rarely see that where somebody's kind of going cold into finding a place. But did some research, looked at Arkansas, and wanted to kind of try that out. So far, it's been working. But we've also had some individuals that retired, went somewhere, lived for a couple of years, and then decided to change. If you are adventurous and you're looking to go someplace for the first time, it may be worth reviewing whether you were to rent versus buy. A good example would be going to Texas, like I mentioned, no state income tax, but high property taxes. So if you're a renter, it's actually beneficial. You got no state income taxes, and you've got no property taxes. Now, obviously, it gets passed on to you as a renter, but things to consider as well. If you're trying something out, you may not want to just jump in and buy something and have to go through trying to sell that in a couple of years or so. But in his case, he was reducing what he could, or he was able to increase what he could afford in the case of a much smaller place in California for more expensive than a larger place in Arkansas. So like I said, so far that has worked out. But again, that's just one of the things to consider. If we look at the property values across America, I'd call this kind of a heat map, if you would. You can see those dark orange, that kind of the burnt orange is going to be where there's more expensive property, and it's safe to say most of those are around the coast. You can see definitely the West Coast is littered with the dark colors. The East Coast some, Florida some as well, and there's some pockets there you can kind of see in the Texas area, Austin. There's some different pockets in Colorado, Wyoming, things like that, where there are some higher concentrated areas of high property values. But it's very important to understand that whenever you're deciding to transition or move as well. All these kind of go hand in hand, and you tie those together. So if you are moving and you don't have the ability to just simply downsize and use the value in your home, and you need to go out there and get a mortgage, you have to factor in mortgage rates as well. Unfortunately, one of the side effects that was a positive, I guess, from the pandemic was we had super low interest rates during that time period. So if you were able to buy something or refinance at that time, then that was great for you. That's one of the issues we're seeing right now, where people have gotten into those low interest rate loans and nobody wants to change. So we've gotten a shortage of supply in the real estate market there, which is helping increase that move up. But that's something to factor in. Interest rates now have been over 6%. Chances are, we'll start to see the Fed kind of come down on rates in the summer, hopefully, and we may see those follow. But by no means are we getting back to where we were during pandemic levels. So it's really important to understand that and run those reviews to find out what your actual mortgage would be, because it's not going to be what it is now, possibly. And then you also got to factor in, real estate, if it continues to keep going up, could be an inflation hedge. Now, obviously, we've had corrections in the past, the savings loan crisis, early 90s, we've had the 2008 bubble. But since then, we've seen, prices appreciate. And like I said, there's a supply issue. So hopefully we don't see a major correction at this point, but keep that in mind. That can be a little bit of an inflation hedge for you as well. No guarantees there, but in the last decade or so, we've seen those continue to move up, obviously. So another thing to worry about is how am I going to survive, or how, what doctors am I using? How much is going to cost me? What's the best state to look at? I'm not going to pretend to know the best state for the best healthcare resources, or the worst. I'm not going to attempt to diminish any specific state, but obviously think about it. You got to look at the cost. If you're not Medicare eligible, if you're looking at the state exchange, the Affordable Care Act, if you're using insurance there, whether you've still got continuation of your retiree medical benefits you might have at your company. Also factor in what's the quality of care. how close are you to different quality of care? You may be in a state that's got good quality care, but you may be living, out in the country where it may be hard for you to get to a good doctor or something like that. So be very careful about looking at all those different options and figure out what it is you're trying to achieve and what's most important to you. I've got a lot of clients that will still come back into Houston to go, unfortunately, to MD Anderson because it's some of the best cancer treatment out there. So you may want to, if you've got issues, you may want to be close to something that may be beneficial for what your family history may be or so. So some of the different states, Value Penguin, you can see at the bottom here is a good website to go in and really kind of dig in individually and look at, your age, look at calculations on different state options. But across the board, some of the better healthcare states they've suggested here can be Minnesota, Connecticut, Florida, with a combination of lower healthcare cost, as well as a good medical care provided. Others, Massachusetts, Arizona. But again, like I said, this is a little bit more unique, kind of outside my expertise. So I'd recommend kind of going to Value Penguin or others and kind of digging into some of that. But we can definitely talk about that and incorporate that in the overall financial plan for you as well. Inflation, another thing that doesn't just affect retirement, it affects everybody across the board. So it's really important to recall how inflation can affect you. We do run that in our cash flow analysis. So we'll typically run perpetual inflation, which to be honest with you is a little bit conservative because a lot of times we tend to see people kind of slow down their spending as they get older. I mean, let's face it, unfortunately, once we get into our mid to late 80s, we're probably not traveling as much. We've got our house, got our furniture, got our clothes. It's really medical expenses that we need to focus on a lot of times, and just the health and food and things like that. Unless we're giving to or supporting kids or beneficiaries and stuff. But the cost of living adjustment is something we do see with Social Security, and a lot of times we talk about the fact that it's not keeping up. Honestly, I went back and ran the numbers for the last decade or so and ran them kind of side by side. If you had $100 about 10 years ago, just running the CPI, the inflation index, that'd be up to about $130 right now. I think it was $130.77. And if you had the Social Security cost of living adjustment, you get $100. It went up to I think about 130 and maybe 40 something. I have to go back and look at it, but really pretty close actually. So so far the Social Security has been keeping up with that. But again, that's just Social Security. If you're taking a pension, you're getting an annuity, that's not going to grow with inflation. You need to make sure that if you're allocating your portfolio, you've got inflationary protection there. If you just put everything in the money market, you're obviously not going to keep up with inflation. So another factor to understand. And keep in mind, different pockets of the country may be experiencing higher inflation than others as well. So kind of in a quick summary of what we talked about, the cost of living across the board, we want to focus on the state tax rates, whether it be income taxes, property taxes, and look at the quality of healthcare and the cost of healthcare and housing affordability. So again, going back to how much is a house going to actually cost me, whether I buy it or how much is rent going to cost as well? Am I downsizing? All those different things we need to look at. But like I said, at the end of the day, this, our job is to give you the financial aspects of it. So unfortunately, about 3/4 of Americans over 50 don't have a written plan. If you give us about, it could be as little as 10 to 15 minutes of a conversation, gathering some data. Give us about a week. We'll put together a detailed cash flow analysis for you to show you, are you on the right track to meet your retirement goals? We can run them side by side with different states, like I mentioned, to show you what that looks like over the long term. And then we can kind of get in the weeds on some of the different healthcare questions and things like that, and property taxes with you as well. But I know we went through a lot of this. Again, everybody's unique and different, but a quick reminder who the retirement group is. Again, we are an independent financial advisory firm that focuses on working with Fortune 500 companies. We've been doing this for over 30 years, and a lot of our advisors, myself including, will only work with maybe 5 to 10 different companies. So it allows us a deeper understanding of your specific company plans. So whether you have questions on your 401k, your pension, your healthcare retiree medical benefits, a life insurance continuation, things like that, we can go over those with you as well. We do have offices throughout the country, so rest assured if you need to sit down with somebody face to face, we can likely accommodate that. Otherwise, web meetings, phone calls, email communication, that's all available. And like I said before, that cash flow analysis, that is complimentary. So take us up on that if you want to see where you stand, and especially if you want to compare some of the different options of state to state. If you're thinking about retiring from one state to the other, it's important to know how that's going to play out. And if you want to schedule a meeting with myself or one of the other advisors with the retirement group, go ahead and I'll keep this up and see if Sam's got some questions coming through. You can use that QR code to get into our calendars, or you can call us at 800-900-5867. And you can also reach us at info@theretirementgroup.com.
Thank you, Wesley. Yeah. Oh my gosh. California state taxes are
Hmm.
insane. My parents just retired and we're trying to like talk them into moving to Texas where my sister is. So
Yeah, we
we've
got a
been
lot
talking
that,
a lot about that.
yeah, we got a lot to go from California to Texas, or I mean, it's simpler move to Arizona or Nevada.
Exactly.
So again, it's tough when you start looking at the
Yeah. It's a
long
smart
term numbers.
decision though. Alrighty, let's answer some questions. This first question, how do state taxes specifically impact retirees with a large savings account? And what should I consider when moving to a zero tax state?
Okay. I'd say I think some of these we kind of went through and covered.
Mhm.
My question would be when you say savings account, is it actually a savings account like a bank account, or are you just talking about maybe your 401k savings? Because that's a big difference. If you've got your 401k or IRA, that's going to be fully taxable usually, unless you put some after tax in there. But generally speaking, most of it's going to be taxable. So then that does apply to, okay, am I in New York or California and I'm going to pay high taxes, or can I move to a state that doesn't have income taxes and save on that? So that's definitely goes into that whole conversation we had. And then piggybacking that, like I mentioned, there's some states that may have state income taxes, but don't tax your pension or tax your IRA distributions. So it's important to kind of look at these more on a one-on-one basis. Probably, I can't really give you a blanket, hey, move from here to there, because there's also ancillaries. A lot of times, it's worth the quality of life because you want that a different climate or the different things that are around you, or you're near your family. But I would say, first focus on the tax savings potentially there, and then we dig into the other issues of the property tax, the healthcare benefits, and everything on the financial side. And that's up to you and your family to think about the emotional side and what your quality is going to be as well. So, not a direct answer, but hopefully that kind of helps.
Thank you. Alrighty, this next one. Considering I'm nearing Medicare eligibility, how do healthcare costs and quality in states compare to each other?
Okay. I had that one slide in there. I'd probably reference you going back to Value Penguin or AARP or another site like that. I'm not going to have the quick answer to what's the best state for somebody, but like I said, look at it from a personal standpoint. It may be, God forbid you've got cancer in your family or you've got a history of heart disease. You may say, okay, well, I need to make sure that I'm near a hospital facility, and it may be that we look at one of those states and it wasn't necessarily said it was the best state for healthcare retirees, but that's on a state level. You might say, well, I've got, I'm focusing on going to the city or the county that's got the best hospital in that area. So those are things to kind of think about. But there are some different higher cost states, especially if you're not on Medicare yet and you're paying out of pocket or you're paying the state exchange. There's other states that maybe only have one or maybe two choices when you go in there and look at the healthcare exchange. So it's really important to look at those. So the best you could do, or there's not a blanket answer, but if you've got like two or three states you're thinking about, give us a call. We can kind of run through those with you and kind of give you the pros and cons of those as well.
Alrighty, thank you. This last one. How does the current inflation rate and the role of mortgage rates influence where I should consider buying a retirement home?
Okay. Well, the mortgage rates and inflation rates are
Mhm.
really going to be kind of a national effect for you. I think more importantly, to kind of figure out where you should buy a home if you're downsizing or retiring and moving states, it's going to go back to those property taxes and really the home value. So again, if you're going from a state that's got high property values and it may have low property taxes, but go to another state that's got lower, you can you can afford more or get a bigger house for less, or you can get a cheaper house if you're going apples to apples. It may have higher property taxes, but effectively you might be saving because you're in a lower cost state because it's going to cost you less for everything else. It may cost you more property taxes, but your value is lower, so it equates there. So just kind of got to look at those. But I mean, typically speaking, across the board, we have inflation. It's affecting the mortgage rates. You're not necessarily going to get, a major difference in a mortgage rate from one state to the next. You may be minute, depending upon if you're buying points down or something like that. So that's not a big state to state effect. The inflation could be though. There are, stuff definitely in higher populated areas, more urban areas. You're probably experiencing higher inflation than what you might see in rural areas. So keep that in mind. Some states, everybody's getting affected by inflation, but some may be getting affected more than others. So it is important to kind of dig in there and look at that.
Alrighty, Wesley, that was it. That was all we have time for today. We want to thank everyone for joining us today. We hope to see you on another webinar very soon. Thanks, Wesley.
All right. Thank you. You guys have a great day.
Bye.